How do you do, everybody? And we're going to talk today about a rare opportunity to bet against a misguided central bank. Um, there's this by the gentleman, by the way, is Mr. George Soros. He's legendary for many reasons, but his most famous trade was in 1992 when he shorted the pound sterling, and he earned approximately $1 billion on that trade. And he relied on a rare and lucrative anomaly in international trade and economics, namely, a government in the body of its central bank, in an attempt to avoid a runaway sell-off of its currency exchanges, its currency exchange it reserves of its excuse me a runaway sell-off of its currency reserves of hard currency for the declining value of its own currency. That's a terrible sentence, and I apologize for that. In other words, they're trying to forestall a devaluation of their currency, so they buy it up at an artificial rate. The conditions that led to the anomalies were completely different in 1992 in the Bank of England and in 2020 with the CBRT Turkey Central Bank. However, the trading opportunities are identical. Uh, then the matter was the European Exchange Rate Mechanism, or the ERM, which was a system of fixed exchange rates that by the early 1990s did not adjust for exchanges between currencies. Britain had higher inflation than Germany, therefore the exchange rate was unsustainable. We'll get to look at a chart in a minute why that is. It doesn't matter the economics or the finance of it. It's just all you need to know is that as the exchange rate declines and the government or the central bank tries to defend it and not have it decline more pressure actually builds for its decline, and ultimately they have to give up. But in the run up to that realization, great sums of profit can be earned. Today, the Turkish central bank, at the clumsy direction of the Turkish Sultan, this, by the way, is Sultan Mehmet. I think, I don't know, the 6th century, I don't know, he lived a long time ago, but the idea that Erdogan is the modern day Sultan is not particularly far from the truth at all. In fact, it's probably closer to the truth than many would care to even suggest, but it's certainly he runs the place like his own personal fiefdom. The central bank chairman or the treasury minister, his one is like his son-in-law. You get the idea. But he likes the idea of low interest rates, and he doesn't want to keep devaluing the lira, which is great for foreigners buying Turkish goods, but it's a nightmare for the Turks. Ordinary monetary control by an ordinary central bank would advise raising interest rates to stem the decline in the currency and the inflation that currency decline is bringing, which is true. The lira is we'll look at it at the end when we look at the chart, but the lira has lost 20% this year alone, and there is significant inflation in the Turkish economy. But while ordinary monetary control would advise those things, these are not ordinary times. Erdogan tries to protect his currency, and apparently the pride. I mean, this is some sort of machismo, the Turkish, I don't know, whatever it is, by exchanging it for dollars and euros that they hold in reserve. But this policy of exhausting reserves has failed. The lira has lost 20% this year, and a rise in interest rate by the central bank could save the lira, but that is really not too likely to occur. Now, despite the historical differences in the circumstances that brought about these, what we could call, I guess, central bank haughtiness or pride, I guess you'd say, the trading opportunities are identical. It's worth learning the history of the conditions that led to both one-way trades, and these are definitely one-way trades. If you're looking at this here, this is a one-way trade. You're looking at this, I mean, you get the idea. These are rare and highly profitable opportunities staring us right in the well. This one is the past. This is the pound dollar, which represents sort of, I guess, like sterling Deutschmark, which I can't get a chart for anymore. They don't really exist. Nobody stores them, but there's a reasonable proxy for it. This is 1992, where well, I'm not going to go into the history of this. It's worth learning it though. But when politics or the governments or whatever you choose in 1992, I don't mean to say that the Turks are so primitive with this sultanate. The proud and fiscally staunch, at least they present themselves as being fiscally staunch conservatives were in power under Mr. Majors during the time that Mr. Soros exploited the haughtiness of the central bank and made himself a cool billion. Um, so it's not, I don't mean to disparage or denigrate Mr. Erdogan, though he does run the place like his own personal sultanate. It happens also in the democracies as well. But any time that politics places its clumsy thumb on the scale of free market exchange, it usually bungles the operation, often causing the arrogance of digging in its heels and refusing to bend with the market. And this invariably creates enormous trading opportunities. It last happened in 1992 with the sterling, and it is happening now with the lira. So, ladies and gentlemen, in summary, let me just say that this is a unique trading opportunity because we know what's got to happen at some point. The lira cannot keep devaluing forever. The government is going to have to install some or execute some corrective action. But in the meantime, it's a great trade with great profit potential. And here we just see on this chart, it's up on the week 2%, 5% on the month, 14% on the quarter, 15% on a half a year, 32 on the year to date, and 35 on the calendar year. That's pretty good returns, ladies and gentlemen. And so with that, we're going to take our leave and remind you that these are rare opportunities that central banks give us to profit off of their unwillingness to surrender to market forces, and therefore we are can, if we so choose, apply those market forces to make ourselves a few dollars. So thank you, and trade with confidence. Bye-bye.